Well, hello everyone. Let's talk about the news of the week. Tell me, did you survive? If you didn't sell everything last week, you are a hero. Because this week has been a real meat grinder. We saw how Bitcoin collapsed to a 6-week low, how ETFs lost billions in a couple of days, how the real escalation between the United States and Iran began, and how the BlackRock fund showed record outflows in a long time. Bitcoin started the week at about 77,000 and on Tuesday it collapsed below 74, hitting $72,600. The asset lost almost 5% in a week. The fear and greed index dropped to 23, which is extreme fear, and it was worse only during the FTX crash. But as always, not everything is so clear. While Bitcoin was sinking, Hyperliquid shot up 19% and XLM jumped by 36. The capital was obviously flowing to other places. In general, we have a lot to discuss. Please like, subscribe, and let's get started. The beginning of the week on May 25th to 26th gave false hope. Bitcoin was holding at around 77,000 and everyone thought that that's it. The rebound has started. 80K is coming soon. But the market, as always, likes to punish the majority. On May 27th, a Black Tuesday happened. First came the news the United States launched airstrikes on an Iranian military facility. Kuwait has reported missile threats. The hopes for peace deal that had been simmering over the previous week vanished. And of course, Bitcoin just folded. In a few hours, the price broke through 74,000, then 73, touching 72,600 zone. It was a 6-week low. The liquidation of long positions exceeded $870 million per day, and this is one of the bloodiest days of the year. On Wednesday, the decline continued. The market was trying to cling to $72,500, but the news was pressing from above that ETFs were losing billions and strategy was transferring its bitcoins to the exchange. By the end of the week, there was a slight rebound. President Trump said they were close to a final decision on a memorandum with Iran, and they started talking about a 60-day truce. Bitcoin returned to the $73,500 area, but it was just too late. The week closed in deep red. Do you remember that I said that the war was the main risk? Well, now we experience it firsthand. On May 27th, the United States launched airstrikes on Iranian military facility, and it was not just rhetorics, but a real bombing. Kuwait has reported that it is repelling missiles and drone threats, and the whole Middle East is on the edge again. The markets collapsed. Not only crypto, stocks, bonds, everything went into negative territory. Oil, on contrary, grew, of course, which added fuel to the fire of inflation fears. But as is often the case, by the end of the week, Trump started talking about the peace again. He stated that they are close to the final decision, and the media wrote about the possible 60-day truce and, of course, the opening of the Strait of Hormuz. The S&P 500 reacted with growth, updating its 9-week high. And Bitcoin, well, it couldn't win back the losses anymore. ETFs were bleeding, and geopolitical optimism just stopped working. And now for the main drama. Institutional investors who were supposed to be the mainstay of the bull market just walked out of the casino. On May 27th, 11 American spot Bitcoin ETFs recorded a new outflow of $733.4 million. And this is the 5th largest one-day outflow in history and largest in 2026. Let's talk about who was the worst, and it was BlackRock. Their IBIT fund lost $527.8 million in just one day. For BlackRock, this is the second largest outflow of all time, and they usually just sit quietly, but here, even they were struck. Grayscale and Fidelity were also not far behind, minus 104 and 60 million respectively. But wait, there is more. Over the previous 6 days, ETFs had lost $1.55 billion, and in 3 weeks from May 7th, the total outflow exceeded $4 billion. It is just a disaster for short-term momentum. There are no buyers, just sellers. And while everyone was watching the ETF, on-chain detectives noticed a strange movement. The largest whale strategy has transferred more than $30 million in bitcoins to the Coinbase exchange. And let me remind you that strategy has more than 818,000 bitcoins in its balance, and Michael Saylor always said, buy and keep forever. But last week, he allowed the sale of some bitcoins to pay dividends. And so the first transfer to the stock exchange. It's not a sale yet, but it's a wake-up call. If Saylor starts draining, the market may sink even more. The community is divided. Some say it's just a transfer to a custodian wallet, and others are preparing for the worst. And there is a video about Michael Saylor on my channel, and I definitely advise you to watch it to understand why it is very important that strategy continues to accumulate bitcoins and not sell them. But there were also islands of greenery in this hell. While bitcoins were burning, altcoins showed their teeth. Hyperliquid became the hero of the week. The token has grown by almost 20%, reaching about $65. The capitalization of the Hype ecosystem has exceeded 1 billion unrealized profits for holders. What caused this growth? The head of ICE, operator of the New York Stock Exchange, called Hyperliquid a bigger opportunity than Nasdaq. Such approval from the boss of the traditional market turned investors' heads. But Stellar showed the fastest growth. On May 30th, the coin jumped 36% to $0.27. Hedera gained 20% and Algorand 16%. Ethereum, on the contrary, suffered. It dropped to $1,965. It's the lowest level in 2 months. Solana is also in the red with about 5.5% losses. Capital simply runs away from the heavy assets and looks for profitability in niche stories. And by the way, if you want to buy and trade cryptocurrencies, I would like to remind you again about the sponsor of my channel, which I used a long time before creating the channel itself. OKX Exchange is the best and most transparent solution for traders today. If you want to join and get welcome bonuses while supporting my channel, see the link in the description box down below. Alright, last week the security forces conducted a high-profile operation. The FBI, as part of a global operation, detained almost 300 people and confiscated more than $8 billion in cryptocurrency. And this is not a joke. Real money, real handcuffs. The FBI also detained a former employee of the company for insider trading in the cryptocurrency market for the first time. The case is related to the Polymarket prediction platform, and the person knew the outcome of the event before anyone else and bet on it. And now he's facing jail. And do you remember the story of the Sui blockchain? Last week, the network went down again. Transactions were temporarily halted due to a glitch. The validators quickly fixed everything, but the bitter taste remained. The technical reliability of many blockchains raises so many questions. And it was also hot on the regulatory front. Pope Leo XIV issued the encyclical Ubi Petros, and for the first time in history mentioned cryptocurrencies there. The pontiff warned that decentralized finance could undermine trust and traditional institutions, but acknowledged that technology could serve the common good. You know, when the Pope discusses your portfolio, it feels like you live in an interesting time. Brazil has approved the launch of #access Solana ETF, and this is the first Solana ETF in the country. Institutions can now buy Solana through the exchange without even touching the crypto wallets. BlackRock has filed a third amendment to the Bitcoin Premium Income ETF application. Apparently, even despite the outflows, they continue to make new tools. The technical picture looks terrible. Bitcoin has broken through the 50-day moving average, and the daily MACD has formed a bearish cross, and the weekly RSI is around 42. Buyers are not even trying to resist. Analysts call the $72,500 zone the last major support level, and if we break through it, we will fly to 71,500, and 68,000 is just around the corner. But of course, there is a nuance. The fear index is at 23, and it is extreme fear. Historically, the best entry points were such such moments, when everyone is panicking and selling, it's time to take a closer look at the purchases. The derivatives market has accumulated a lot of short positions. If positive news suddenly appears, like, I don't know, a truce, a reversal by Fed, rumors about the adoption of the Clarity Act, the market may fire a short squeeze. So what awaits us this week? We are looking at geopolitics first. If the US and Iran agree on a truce, Bitcoin could bounce back to 74.5 to 76,000. If not, we will test $71,000. Also, we're looking at ETFs. If the outflows stop, there will be a chance. If they continue, the bears will continue to push down the price. And of course, we are looking at strategy. If Saylor officially announces the sale, the market is likely to collapse to 70,000. If the transaction was technical, we will exhale. But that's going to be it for today. Link to OKX is in the description box down below. Subscribe, click on that notification bell, and I will see you tomorrow. Bye.